Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. I do apologize for being late. I had a little technical issue, but it's been worked out. Hopefully you can hear me. But yeah, here we go. A lot to talk about, man. Lordstown Motors. It just suddenly came to life today. They had earnings that came out. They did beat EPS by 2 cents, and there was some additional news about their deal with selling their product. So we're going to get into that. We're going to talk all about what's happening with Lordstown. Got several companies to talk about today, but I would like to start off first. Today is Veterans Day. So the Treasury market is closed along with banks and government offices. The stock market, however, was open for a full day of trading. Now, before we transition to market commentary and talking about different stocks, I would first like to extend a profound note of gratitude to all U.S. veterans, and especially my brother who served in the Marine Corps, for your service and dedication to our country. Without your sacrifice, I would not be able to sit here in front of this camera and talk to all of you. So thank you to all of the veterans who have served our country so bravely. And from the bottom of my heart, thank you. Okay, now transitioning to stocks, right? They lacked a bit of direction today. The NASDAQ and the S&P, they rebounded up about 0.5% and 0.1% after falling for 2 sessions, while the Dow Jones, it shed 0.4% on Disney's performance. They were down quite a bit today. Today's session continued to be about higher inflation data, as investors are still trying to assess how surprisingly high inflation could impact the Fed's rate hike plans. I don't know, but it could. Still, signs showed that there were traders who were not fazed, as growth in technology shares such as Netflix and JD.com, they both gained some ground today. On the corporate front, Tesla was down about 0.5%. After filings showed that Elon Musk did sell, I think it is about nearly $5 billion worth of his Tesla stock. Also, Disney's decline after the company missed both earnings and revenues and reported a slowdown in subscriber growth. But for everyone here, we weren't surprised by that because we knew subscriber growth was going to slow. There were no major economic data releases today. So let's get into some stocks. I do want to talk about what's on your mind, though. So if you do have a question, leave the ticker symbol and your question in the comments, and I'll stop what I'm doing so we can go over those stocks. Now, I see some in the comments already. I see BBY, BBB, Lordstown. Let's see. Is that BBB, Lordstown, and Door to hit KO tomorrow? Is that Doordash or Opendoor? I'm gonna have to speculate on which one you mean there. Let's see here. Yeah, I do apologize for being late. I do see that. I had a bit of a technical issue with the mic here. Okay, so I'll get into those companies. We got BBY, BBB, Lordstown. So I'll start off with Lordstown because they were up nearly 24% today. And their earnings came out. They beat EPS by 2 cents. And let's see, they had cash of $233.8 million. And that was of September 30th. Net loss included non-cash items of $11.1 million of intangible assets, $6.6 million in stock compensation, and a $3.3 million gain on a fair value adjustment of warrants. Their 2021 financial outlook, the endurance commercial production and deliveries beginning in the third quarter of 2022. So now we have a date for Lordstown and their endurance, and they have a full-size pickup truck, a little bit different from Rivian's pickup truck, and they're really going for fleet managers. That's who Lordstown wants to go after with their endurance pickup truck. Now, full electric, but that date, we can hold them accountable now for third quarter of 2022 for production and delivery of the endurance pickup truck. Building a limited number of vehicles for testing, validation, verification, and regulatory approvals during the remainder of 2021 and the first quarter of 2022. So we've seen video like on their Twitter feed of different employees driving the endurance pickup truck. So they are getting that tested right now to get all of their regulatory approvals and verification done. Let's see, there was a cash balance between 150 million and 180 million as of December 31st, 2021. Really? Because that hasn't happened yet. Maybe they meant November. Maybe. I don't know. That looks like a mix up there because it's definitely not December 31st. Let's see. They anticipate to pay down $100 million to be made by Foxconn under the asset purchase agreement in November, and $15 million in insurance under the equity purchase agreement in October, but exclusive of any other potential financings. Capital expenditures between 330 million and 350 million for the full year of 2021, down from 375 million to 400 million, largely as a result of the timing of purchases related to tooling and production readiness. Selling, general, and administrative expenses between 105 million and 120 million, and research and development costs between 320 million and 340 million for the full year of 2021 for this year. Now, the big news that came out for Lordstown during their earnings today was news about the Foxconn deal. Now, it says here in the press release, let's see here. No, that's not it. Hold on one quick second here. Let me go back. I wasn't prepared to talk about Lordstown up front, so I've got to get my notes here. Didn't have this pulled up. Just give me a quick second. I normally don't fumble around like this so much. All right, let's see here. Where was that press release? Okay, let's see. I'm totally lost it. I can't believe that. Oh, here we go. Is this it? This might be the press release. The press release actually came out yesterday for Lordstown. So part of Lordstown's move today was the production announcement that I just talked about. But here we go. Lordstown Motors jumps after disclosing more details on Foxconn partnership. Now, this is the important thing that I wanted to point out. It looks like Lordstown is selling a little bit more than we maybe originally anticipated to Foxconn. The press release says Lordstown Motors, the sale will include certain assets such as the hub motor assembly line and battery module and pack lines. Foxconn has agreed to make a down payment of the purchase price of $100 million by November 18th, and I'm tongue-tied here, and another payment of 50 million on each of those, the hub motor assembly line and the battery module and pack lines by February 1, 2022, and no later than April 15th, 2022. The balance of the purchase price will be paid at closing. In addition, RIVN and Foxconn have agreed to pursue a contract manufacturing agreement for the Endurance pickup truck. And we know now that they are looking for the end of 2022 to produce that, which must be entered into before the closing date, which is targeted for April 30th, 2022. Lordstown Motors and Foxconn will pursue a joint venture agreement to co-design and develop vehicle programs for the global commercial fleet market using the MIH Open platform. So it looks like Foxconn has more of an EV, electric vehicle, ambition than we might have first thought when the deal came out. So I do find that interesting. And of course, Foxconn is works very closely with Apple. And I don't know if I'm making a bridge there that doesn't exist, but could Foxconn and Lordstown Motors maybe come up with some design for an Apple car? That would be interesting. But I do find that interesting for sure, definitely. Okay, moving off of that, let's go to what was one of the first tickers up here, BBI or BBB. Let's see here. So let me hop over to TradingView. That's where I do all of my charting. There's Bitcoin at 65,200 right now. Let's go BBI. What would that be? A biotech company? BBB, not, okay, gotcha. BBB, not BBI. Okay. That's easy enough. Oh, no worries. No worries. It's all good. It's BBBY. It's a bit of a tongue twister, isn't it? 3 B's and a Y for Bed Bath & Beyond. Okay. All right. So look here. They were up 5.9% today. This stock has been gaining momentum. Now, they missed on their last earnings here, which provided a very big gap down. They reported on September 30th, and they had an EPS of 4 cents. The estimated EPS was 52 cents, so they missed that by 92%. They came in at revenue at 1.9 billion, and the estimates were 2 billion, so they missed by 3.5%. That caused this pretty big gap down that you see right here. There's a big hole in right here. Big hole. There's no candles there. It's missing. So that provided a bit of an opportunity because now the stock got down to as low as about $13.43 a share, and now it's back up to $23.08. So that was a really nice gain. Now, there's one concern that I do have. There is momentum behind it. Right now, the RSI is stretched out, okay? If we look at it, it's at an 80.35. Martin, thank you for that $2 and I love that that sticker there. That's pretty cool. Thank you for that. I appreciate that. Okay, getting here on the analysis here. All right, let me see. I'm going to put that there. That's pretty cool. It doesn't show the sticker, but it gives you a text reference for what the sticker is doing. I find that funny. A pixelated hippo there. That's cool. Thank you. I appreciate that. That's awesome. Okay, so the concern that I'm having, it's got good momentum, right? But the RSI is a bit stretched out right now at about 80.35. And again, 70 and above is over overbought there. So it is a bit high. It is a bit high. Now, the other thing, though, as it's moving up, we still have a bit of a gap. And if I measure this from where the price is now up to the 200-day moving average, we're still about 12% away from that. Once there's kind of a couple things happening here. We're 12% away from the 200-day moving average. Once it hits that, that's going to be a hard break, and that's going to be resistance to keep the stock from moving any higher. Now, if we look at two things here, one is the RSI, which I pointed out is extended right now, but volume is also going down. So if I put a line here on those few last bars here for volume, you can see it's in a downtrend. So we've got a bit of a divergence between the RSI and the volume, even though it's slowly ticking down. The RSI, it looks like it got as high as 82.23. So it's come down about 2 points there. So this is extended. That would give me a pause that maybe we're running out of steam right now for it to go higher. Maybe tomorrow it won't be able to push up as far as it has. But that's just a speculation there. There's no guarantee that that is what could happen. Because if we look at the RSI here, it peaked back on November 5th, and then from November 5th till today, November 11th, it's been elevated above that 70 point level, okay? Up in the 80%. So it could continue to stay up here, but volume is coming down, and I think that could provide a slowdown for the stock. But it may not put the brakes on it quite yet. It could go to the 200-day moving average, and then that's where the brakes would definitely be applied. So just a couple of things that I wanted to point out there about how the stock is acting technically in a technical structure here. So yeah, there's Bed Bath & Beyond and what it's doing. If we go back and look in time here, as far as price, we would have to go all the way back to October of 2020 to find these current prices. So all of 2021, it had these spikes that occurred near earnings. There were definitely spikes on earnings. Let me do this one last thing here. Let me put a vertical line on earnings, and then you can see it didn't happen all the time, but it did happen occasionally. It seemed like on earnings where they were red, where they missed, there was the biggest impact. So if we look at these, well, I'll do one more because there was a gap up on this green earnings here. So starting to the left and working our way to the right, we had a gap up after earnings here and then a rally. The second earnings, they missed, but the stock ran up, had a blow off top on it. That had got to be retail traders getting involved there to make that spike. And then we get to the next earnings, they were green, but they gapped down, and then they traded flat before again spiking, coming back down, and then on earnings here, it fell. And it's been falling ever since until about October 28th is when it turned around. Okay. All right. So it's moving. I do see some signs of weakness though, maybe slowing down. And then of course that 200-day moving average. All right. So there's Bed Bath & Beyond. We've looked at this stock a few times in the past here on the show. All right, what is another ticker that was up here to look at? We did Lordstown, Bed Bath & Beyond. Any others? Any other tickers you want to look at? We certainly can. All right, well, I'll just keep getting into it. Talk about the other stocks that I had on my list today. And of course, if you do have a question, just leave the ticker symbol in question in the comments, and I would be glad to go over it with you. Gold. I know we don't all trade around gold, but gold did reach a high today. It hit over 1,800 an ounce earlier this week, and it pushed up a little bit higher today. So if you do hold gold, and I suggest just buy a couple coins, it's okay to have, right? There's nothing wrong with having a couple coins of gold laying around. It's fun to have. You can hold it. So something to think about. But it is high. It got up to 1862 today, which I believe was the highest since mid-June. So just have that on your mind there in case you want it. Okay, I see Doordash. Yeah, Doordash. They did good. And Rivian. Okay. Yeah, I did want to look at Rivian and KGC. All right. So let's start here with Doordash. Their ticker symbol is Dash. They were up 6.15% today. Doordash has been doing really good, and even though they missed here on earnings, I think they did a pretty good job on earnings. They were not as profitable as estimates thought they would be. They reported a loss of 30 cents a share. Estimate was a loss of 10 cents, but they had revenue of 1.2 billion with estimates of 1.1 billion. I know me personally, I was never a Doordash user until this last quarter. I actually started using Doordash for some fast food there every once in a while. But this is looking pretty healthy. I know it hasn't been public that long, so we don't have a lot of history, but it is in a pretty nice pattern, and it's using its 50-day moving average. And what do we say about 50-day moving average? If a company is trading above the 50-day moving average, that is bullish. If the company is below the 50-day moving average, that's bearish. Now, you can see it keeps bouncing off, and that's the blue line that is running across your screen. That's the 50-day moving average. It bounces off of that. Yesterday, it bounced right off of that 50-day moving average perfectly, and then it ran up today. Now, it did get to, let's see, a high of 233 during the session today. But right now, in after hours, it's up, I mean, call it flat. It's 0.4%. So it's looking good. It's looking healthy. I think it can continue to slowly tick up and to the right, just like it's been doing. And also remember, for a lot of the U.S., we're heading into the winter months, right? And during the winter months, more people are inside. Less people are barbecuing, cooking out, having these get-togethers outside, and they're bringing everything inside. So they're going to be ordering more, right? They're going to be cooking more. So that's a positive, because DoorDash did just start grocery deliveries. That's going to be a huge kick for them, I think. DoorDash is also starting to ship nationwide. I know you can get one of those popsicle cupcake type of things. You can purchase it on DoorDash and have it sent, across the country. So that's going to be a boost for them, especially around the holiday season, right? So I think they're going to have the next couple of quarters for Doordash are going to be really good. I think the stock is going to continue to go up and to the right. College parties, campus is dead time. Yeah, okay. Yeah, college parties, definitely. Kids are in college. I got that. I got you. Yeah. So I think the stock looks healthy. It's above its 50-day moving average. Right now, the RSI is at a 52, so it's got a lot of room to run. Volume is kind of bounces around, comes in waves, right? So if we look at the volume down here, it's tough to see on your screen, I know, but it's like coming in waves. And right now, it's at the beginning of a new wave. So I think this stock can move higher in the short term. And that's Doordash, ticker symbol Dash. All right, so I think it's good for Doordash. Okay, what was another one? Let's look at Rivian. Rivian had another good day today on the market. But I do think Rivian is... It's funny looking at the day chart like that, huh? 2 candles, that's it. But they were up 22% today. Let's go to the 1 out. No, I need to go closer in. Let's use the 5-minute chart for Rivian. I do think it's starting to get extended a bit here. So if we look at the 5-hour chart, you had that nice run up yesterday when it came on market, sold off, tapped out down here at about $95, and then it rallied, gapped up. It came all the way up to this area here, and it was between about $120 up to a top of about $125. And then if we go over here and look at the end of the day today, what happened? Well, we had this dip below its 50-day moving average, which quite frankly, it means nothing right now because the stock literally just IPO'd. So the moving averages don't really mean anything. Now, what I find interesting is that it's above that let's call it $121. I'll put a line there, and then I'm going to put a resistance line at $125 right there. So I could probably see this thing maybe starting to build up a position here between that 121 to $125 for a little while. However, I do think that with Rivian's IPO, since it was so hyped and on everyone's mind, I think some traders, retail traders especially, maybe took some of their money away from other plays. Like maybe they took money away from Lucid, or maybe they took money away from Tesla. I don't know, but maybe they took some of their money away from those other companies in the space to put it in Rivian, hoping that they could get a quick turnaround and make some money that way. So while it has at the end of the day today gotten back up to this range, I don't know if it can stay here for very long. I do have a concern that maybe it might fall back down to a different level of support. I know there was support around the $100 mark. There's also support up here about $115. It still needs to find its place. I don't think it's found it quite yet. I think some money will come out of it. If you look at this volume, and again, we can't use technical analysis too heavily on a stock that just IPO'd. There's just not enough history to really tell anything. But if we are going to look at a few little signs here, the volume was really heavy on IPO day yesterday. Today, volume was much, much lighter until the end of the day. It picked up a little bit. The relative strength index Also dipped towards the early afternoon hours of today, and then has slowly creeped up. Now, I'm just pointing this out to you, but we can't really rely on this too much just yet because again, it's brand new. It's just on the market. So while we can start to maybe find some clues, we can't hold anything as tight as we could, like looking at Doordash or looking at Bed Bath & Beyond. We can use technical analysis on those types of stocks, but this one, not quite yet. Let's see, what else is in the... Hello from Brazil. Thank you for joining me, JP. Facts, thank you. I hope that means you think I'm sharing facts, because that's what I'm trying to do. All right, let's see here. I've traded it twice, but I'm afraid to own it at these prices. I would agree with that statement right there, 100%. For Rivian, I do think it is highly valued right now. There's a lot of expectations, and that expectation bubble could burst really quick. So just be cautious. Just think about that. Again, I don't want to go in circles and just keep repeating myself, but I just want to point out we can't use technical analysis yet for Rivian, but we can start to get clues. Okay. All right. So there's Rivian. They did a nice job today. They're down 1.9% in after hours. I should mention that. And that brings them back down to that $120 possible support level. And that's also about right where their 50-day moving average is. So that's where they are in after hours right now. So we'll see how they perform tomorrow. Money could come out of the stock tomorrow, and we could see it come down and try to find a support area, either at 115, maybe it stays at 120, or maybe it comes down to $100. There was quite a bit of support at that level too. All right, what is the next company that we wanted to look at here? Should we look at, I thought I saw another ticker on here. Their market cap right now is 10 billion. Is that right? It says, puts it at 10 billion here, but that doesn't sound right. It hit 100 billion earlier today. That doesn't sound right. Sometimes that happens when you have a company that's fresh on the market. There can be little kinks and bugs to work out. So TradingView has it at a $10 billion market cap, but I'm pretty sure it was 100 billion. Maybe they've got a decimal point off right here. Maybe it is 102 billion instead of 10.2. Yeah, I'll have to double check that. Let's see here. All right, let me plug Rivian in. Okay, Rivian. They don't. I don't even have a market cap in here for them. Okay, yeah, I'm pretty sure it is 100. I'd put that at 102 billion because it's at $120 a share, and there's what 135 million shares out there. Yeah. Okay. Well, a bunch of comments today. I love it. Let's see what else did I don't want to miss anything here. Let's see here. Let's see here. What other? When shopping for stocks to invest in for next day at a target of 15%, how do we talk right stocks to buy day before? How do you know what stocks to buy the day before? That's a really good question. You can use screeners, but if you're doing research on companies, let's pick a company here. Let's pick one that let's see. I thought I saw another ticker symbol in here. Did I miss a ticker symbol? I thought I saw one. Okay, I thought I saw that. KGC. Okay. So gold, Kinross Gold Corporation, up 5.1% today. All right. So one thing that you can do is use a screener. Right now, there is a company. What is this company called? What? Oh my goodness. Okay. All right. Let me just do this. Earnings season is almost over, but let me use earnings season as an example. There's a trading strategy. It's called the PEG strategy. It's called power earning gaps. Yeah, FinViz, that is, they offer a free, they offer a screen, getting tongue twisted here again. Screeners as well. TradingView has screeners too. But the PEG strategy, power earnings gap. So if you're going into, and let's use the trade desk. This is a company that got, we get out of the 5-minute chart. Let's go to the 1-hour chart. This is a company that got beat up pretty bad. And it fell pretty hard. If I go and look at 2021, so it had this nice run up at the end of 2020, but then for 2021, it fell down all the way. It was up here at about $100 a share. It fell all the way down to about $45 a share, and it just kind of up and down, up and down. It was beautiful for swing trading. But the last earnings that it had, there was a big move. And this strategy works really well for high growth companies like this, because the high growth companies, they're the ones that are going to move the fastest. So what you do is you get your order already put into the system. So all you have to do is tap the button to execute your order, and you're going to buy it and you're going to sell it really quick. It could last as long as 5 minutes. It could be an hour, just depending on the technical signs. So you want a company that is either announcing before the market opens. That typically works best, but it can work in after hours too, after the market's closed. But TradingView gives you all the information, and you can use TradingView for this. You can also use Webull, and I actually find using TradingView and Webull in a combination together works pretty well, because Webull is where I can do my trading on, but TradingView, I just like their charts. They can get so much cleaner and more technical. But back to this situation. Now, TradingView does have some third-party platforms that you can integrate into, so you can trade directly from TradingView. but Webull is not one of them. So what you would do is you would set up your execution ready to buy. 100 shares, 1 share, it doesn't matter. But you're ready. You have a trailing stop loss set, right? So if the stock goes up 5% and you have a trailing stop loss at, say, 2%, when the stock drops 2%, it automatically sells. Now, you can do this day trade even with a small account. Just be aware that with a small account, you cannot do any more than 3 day trades, and that's buying and selling on one single day. That is 1 day trade. With a small account under $25,000, you can only do 3 within a 7-day trailing system. That's what it is. Now, you can do a cash account, which is on Webull. That's how that's managed, but they stop you from being able to execute a 3rd-day trade. Robinhood, if you're using that to do day trades, they actually give you a pop-up warning message, and they can prevent you from doing a 4th because you can get booted off a platform, but that's going into the weeds. Anyways, back to this strategy. So you know earnings are coming up. You know what the expectations are. If you're in TradingView, you can just tap on the little house or home plate icon at the bottom, and they'll tell you what the estimates are, right? And if you're in Webull, and let's use TradingView too, the trade desk also. So I'm going to pull them up. In Webull, if you're right here in the middle, underneath the chart, this thing can go away and hide so it's only the chart, or it can pop back up. But if you go under financials, they will actually give you the earnings per share estimate. So for the next quarter, the estimate is 25 cents per share EPS. And then on the right side here, they give you the revenue. So it tells you it's in billions. So revenue, $0.39 billion. So that's $390 million. That's what they're expected to do. So then the next thing that you have to know what the estimates are. And if you're looking at TradingView and Webull, you may find that the estimates are off just ever so slightly. And that happens from platform to platform to platform. They can be getting their information from different sources, but they're pretty close. And then the next thing you want to do, go to Google and type in the trade desk, investor relations. And from the trade desk investor relations, just whatever company it is, put investor relations. All publicly traded companies have a website dedicated to investment information about the company. All right. And then you want to go to news and events. Now, most companies are set up this exact same way. When you go to news and events, you're going to get the press release, right? So if this is a company that's going to announce their earnings before the market opens, then here's what we're looking for. You want your order to be in. So all you have to do is tap execute. And here's what we're looking for. We know what the estimates are. We have our trade set up to go. We need to be looking at the chart on a 1-minute time frame because things will move very quickly. Let me scrunch this back up here a little bit. Let's go back here to this earnings. All right. And the reason this is called the power earnings gap is look at this. the stock was down here, right? It was all the way down here. After earnings came out, it jumped to right here. That's a big gap. That's the power earnings gap right there. All right, so now your trade is ready to execute. Your stock chart is open. You're watching. You want the press release to come out. And all companies, by law, SEC, they are supposed to release their information at one time so everybody gets the information at the exact same time. So when it is released, when they announce their earnings and the press release is dropped, you open it up and you're looking for their EPS and their revenue. Now, if it beats, then you're going to see on the 1 minute chart the price start moving rapidly. You're going to execute your strategy. And you're going to execute on your trade, and you're going to watch it. It's going to jump up. Now, for reference, this one, it went all the way up to here, which is a 21.93% move in 1 minute. You buy at the beginning, 1 minute later, you sell. And if we have a 2% trailing stop loss, that means when the stock ran up 21.9%, as soon as the stock pulled down to 19.9%, that would have been a 2% drop from this move, your trade would automatically sell. And you would have just booked a 19.9% profit. That's the power earnings gap strategy. And it works at earnings. And it works really well at earnings. Really well. So the best companies to use this on are high growth companies. Companies that are more, I don't want to say mainstream. That's not the right word. But companies who are, I guess, have more attention. Who will be on the news, because when earnings are released and it's a big company that people are paying attention to, they may do a news story on it. Now, if you're not comfortable with using their earnings report to see this information, well, you can go to different services, or you can watch the stock chart. Once the stock starts to move, and the way you see it moving is by volume. Look, it's hard to see, I know, because it's so small. Let me get this mark out of here. But when you see volume is this low, right? This right here, very low volume, very low volume, low volume, low volume. And then you see a big spike in volume, all right? You know that it just moved. And these candles are 1 minute candles. You want to use that. I know this may sound a bit confusing because there's a lot of moving parts to it, but it's a strategy that I use during earnings that works really well. This is one of the reasons why I'm thinking about, for Patreon users, to offer, and I'm going to do it. I'm looking into the best way to do it, to offer the buy and sell signals whenever I do make a move. The power gap, this would be a perfect one, because we could send out a notice saying, okay, we're going to use the peg strategy on the trading desk. Their earnings come out tomorrow morning, right? And then we can send out I'm looking if Patreon is the best way to send the signal out, the fastest way to send the signal out. But for Patreon members, we're going to offer that type of a service. I'm looking into the best ways to do it right now. Because I did ask you guys on a live stream a couple days ago, and you said, yeah, it would be a good thing to do. So I am going to do it. But this power gap strategy, it is an excellent way to get a quick return on your investment. And I mean quick, just a couple minutes. So yeah, yes, do it. Yeah, I am going to do it. I'm looking into the best way to do it, and I'm going to offer it to our Patreon members because it takes a ton of research to find the right ones to move on. Okay, let's see here. Using a screener, right? So you can go to Trading View. We can go to Trading View here. And at the top, tradingview.com, they have a screener right here. And they've got stocks. You can use it for crypto as well. And you just tap on it, right? This is one of the best ways to find stocks that are moving. You can use it for the middle of the day, but usually when a stock's going to move, it's going to make its move in the morning unless there is specific news that comes out. So that's why having notifications turned on for a different news service is really good. Also, if you're following a company that you really like, set a stock alert. Let me just do that real quick. We're in the trade desk, right? We know that earnings were coming out. Who knows? Who cares about earnings? This is a stock we're trading. Let me go to the one-day chart here to get a better look at this. All right. Say this is a stock that we wanted to trade. We're paying attention to, but we don't want to miss out on the next big move, right? Well, you can do two things. You can set a stock alert. Let me, all right. So you can set a stock alert. This thing was down here, all the way down here at $68, right? Let's go and set a stock alert for $70. So you just click there, add alert for TTD, which is the trade desk, and it's at $70.22. Because if it has bounced, then it's going to come up and pass this $70 mark. We get our trade alert, and once we get our trade alert, then we can open up the brokerage account, whatever we're using to trade on, whether it's Webull or Robinhood or whoever you're using as your brokerage, and then you can see, okay, is there big volume? All right, it just passed $70 when it was down here at $68. Is there big volume? Oh yeah, volume is rising. Volume is like 3 times bigger than it normally is. I'm going to execute this trade. So using stock alerts can let you know when a stock has moved to a certain price point. And it's very helpful in identifying what stock to buy and when to buy it, right? All right. So now let's jump back to the screener here. So on the screener, you've got different things that you can look for. I mean, I could do an hour-long video on how to use a screener. But if you go to performance right here, you want to look for companies who are moving, and you want them moving in the upward direction, right? You've got 1 minute change, 5 minute change, 15-minute change, an hour-long chain. I mean, this is something that there's tons of information that you can use on. So you want something with high volume. Volume means it's being traded and it's being traded rapidly. You have filters over here. So you can and again, I don't want to get into the weeds of this because it's just so much information. But you can set the filters to narrow your search down, and you can end up coming up with the 5 best companies, the 5 companies who have the highest momentum right now, and go and pick one of those 5 companies to invest in. But I'm not going to get into the weeds on using screeners, but a screener, that's how you find the companies who are going to move, who are moving, that you can get on board with. So Trading View, excuse me for a quick second. Sorry about that. Trading View has a very good screener. And it's, what was the other company? Finviz. They also have a screener. And I believe on the Finviz one, and it will actually show you momentum too. Momentum, it's just volume, right? So that's what you're looking for. And if I remember correctly, if you go down here, it actually gives you these different signals here. So remember how I like to use the wedge, symmetrical triangle? I talk about it a lot, right? Well, you can actually go in here and pick that specific chart pattern, right? And then it's going to show you the different companies who are in that specific pattern right now. And then you can go in and click on the different chart to learn more about it, to see if they are getting close to their nexus point. Because remember, on a stock chart, let's go to ChargePoint, ticker symbol CHPT, because they had a beautiful one. If you look right here, look, this is a falling wedge, right? And as the price gets closer, because the top line resistance and the bottom line support, they're getting closer together as you move forward in time. And as they get closer together, the price starts moving in very small movements, like 1% or 2%, or even less, maybe 0.5%. But as the price starts to tighten, it starts to get down here, and I call it a nexus point. I do that because of the whole Marvel and Loki, and a nexus point is where something happens, right, that's not supposed to. So usually when they get down here to the bottom, down here, they will break out, and they're usually, the breakout is pretty strong. And on ChargePoint, when it broke out, right here was its breakout point. And if I measure from that, we won't even go all the way to the top. We'll go to the 200-day moving average right here. That was a 36% gain over, let's see, that was a 20-day rally. A 20-day rally from October 12th, it looks like, to November 1st. And it hit its 200-day moving average. And that's always a sign of resistance, when a company is below that and it's moving up towards the 200-day moving average. That's resistance. So that pattern, and then riding the rally of that breakout, 36% gain in 20 days. I'd say that's pretty good. But this was a nice breakout that we called. Usually when they form this way, they'll break to the upside. They don't always do that. There is times when they break to the downside. So you always have to be watching for this breakout point. When it gets above that resistance, does it continue, or is it a false breakout, or is it just not at the right point yet? Is there not enough volume or momentum behind it to push it up? And if you see for ChargePoint down here on the RSI, the RSI had reversed several days before that, because it was rallying up to the top, the resistance line, and then the momentum just kicked in for this thing, and it popped and it ran. Now, that is something that you can actually look for here on FinViz. They will give you different chart patterns, and you can pick the chart pattern that you want. Right now, it's on a wedge. You can change it to all kinds of different things. What's the most active stock? Most active stock means a lot of volume, right? A lot of people are trading it. It doesn't always mean a stock's going up, right? Just because it's active, that doesn't mean up. Active can mean, people are selling out of it and it's going down. Okay. Boy, I feel like I just totally derailed our conversation by going in that direction. I hope you found that information useful. I hope you found it good. I usually don't go that far off topic, but I don't know. I just felt it pulling me that way. Okay, let's see here. What I think I missed quite a few comments here. You are welcome anytime. Let's see here. What all right, what company do we are you guys talking about there in the chat? Or did I miss a comment? Is it Ride? Did somebody ask about Lordstown? I'll rewatch the details, but with Ride down to 624 after hours, is it a buy? See, here, let's pull Ride up. I think Ride was a quick ride, to be quite frank, for today. I don't think it has legs to stand because the stock it's just been down. Okay, excuse me. All right, so on Lordstown, they had news today. They had their earnings. They set their date for when they're going to manufacture and deliver their pickup truck, and that's in the second half of 2022. Right now, they are working on verification, getting it certified, making sure it meets all the standards. But the stock also got news yesterday, and I think it reacted today from yesterday's news too, about further details with the Foxconn deal. They're going to buy some extra stuff from Lordstown. But if you look here, the stock was up 23.9% today, and it's down 9.5% in after hours. I do not think this has legs. I don't think it can hold up. I think these are individuals, traders who got into this on the news, and they're riding this like a momentum stock that is going up and then coming straight back down. So if you did not already invest in this, I would not invest in this right now. And for Lordstown Motors, I don't think this is an investable company right now. Now that we have the second half of 2022 for manufacturing and delivering the endurance pickup truck to customers, then as we get closer to that time, then possibly we could move towards a position at that point. But right now, it is pure speculation in investing in Lordstown Motors. All right. So that's Lordstown Motors. You're welcome. No problem. Whatever is on y'all's mind, that's what I want to talk about. So just keep the questions coming, and we'll keep going. All right. There were a few companies that I did want to touch on. So while I am looking at them, if you have a question, just leave the Sorry, I keep looking off to the side of the screen. I'm looking at your comments, and I think I'm talking to you when I'm looking at your comment. I got to stop doing that. I need to look at the camera to talk to you. So I do apologize for doing that. That's something I got to get used to. Okay, back to a couple things that I wanted to look at, and then if there's something on your mind, let me know. I want to look at Bitcoin real quick. We looked at it yesterday after it made its all-time high. Oh, that was the wrong chart. BTC/USD on TradingView, and then I use Coinbase for their data. All right, so Bitcoin had that same, wedge pattern there, or symmetrical triangle, as you can call it, and it has it broke out of that. It ran up, new all-time high, skip a day, new all-time high. And then yesterday I said if it could close above this line right here, 63,600, is it? I believe that's where it's at. Then I think it is still healthy and we are still in for this year-end rally, let's call it, right? I think Bitcoin can go to 75,000. So I just want to double check that. It did close above it, well above that support line, and it's pretty much flat today, right? It has moved. Let's see, the high today was 65,600. The low was 64,100. So it hasn't really moved a whole lot today. So it's good, and I think there is this little pullback here is healthy. Nothing wrong with that. Elon's got some money to burn. I'm only half kidding when I ask if you think he'll give Bitcoin or Doge a nudge. It's possible. I don't know. A lot of the stories I'm reading, he needs to pay some taxes or something. So I don't know. But yeah, he could. It is possible. But with Elon Musk, you really never know. I mean, the guy's a genius. He thinks about so many things in so many different ways. It's always possible that he does tweet something. But yeah. All right, let me plug in Ethereum, ETHUSD. And then again, I use Coinbase for their data. He has a good time with the world. Yes, he does. Absolutely. All right, Ethereum is kind of in that same pattern here the past 2 days. It hasn't really moved much. It stayed above support. I mean, Ethereum is well above support. Ethereum is so hot right now. It's using its 21-day moving average as support. It looks really healthy still, even that little pullback we had. And if you look at the chart right here, this indicator that TradingView is giving says that Ethereum right now is a strong buy. A strong buy. That's the signal they're giving right now for Ethereum. Okay, let's see. There were a couple companies that did have their earnings that I thought I would talk about. If you guys are up for it still, I know we've been going for a little over an hour now, talking about a few different things. But I did want to talk about Dutch Bros, if you're interested in hearing about them. Their ticker symbol is Bros, BROS. They're a coffee chain, right? They haven't been public for very long, so we don't have a whole lot of data. If I scrunch it up, this is the daily chart. That's what it looks like. But they have been performing pretty well. They were up about 6% today. And if we go here from their opening to just where they are right now, that's 104% gain in 57 days. So they've been performing very well. Now, Dutch Bros, they had their earnings report, their first earnings report as a publicly traded company. Now, they are an Oregon-based coffee chain that operates unique drive-through locations, mostly in the western U.S. states. The stock has risen nicely. It IPO'd here at $23, it looks like. If I clear this off here, I'll get a better look. No, it opened at $32. It opened at $32 back in September 15th. And then it briefly got up to $80 a couple weeks later. And then it came back down a little bit. That set lofty expectations for this company as a high growth company heading into its first initial report. For these types of companies, that first earnings report is always important. Whenever a company goes public, the first earnings report tells you a lot, and it is very important. Now, thankfully, though, Dutch Bros earnings did not disappoint. In terms of the headline numbers, Dutch Bros reported a big beat on EPS, while revenue saw upside as well, but not to the same extent as its EPS. Dutch Bros also provided upside revenue guidance for Q4. A big part of the Dutch Bro growth story is its goal of expanding quickly. It opened 33 new shops in Q3, of which 30 were company owned. Now, since 2015, the shop counted, the shop count has nearly doubled to more than 500 drive-through shops across 11 states. The company entered 2 new states, Texas and Oklahoma, this year. Dutch Bros has a lofty goal of reaching 4,000 locations within 10 to 15 years. That is impressive growth if they can meet those goals. It's important to note that roughly half of its shops are franchises right now. They are allowed to open new stores, the franchises that is, in their existing market. However, the vast majority of future growth will be through the company-owned shops, not the franchise. Several years ago, Dutch Bros stopped offering traditional franchise opportunities. And I think that was a decision made because of the allure of the Dutch Bros brand, and its brand is centered around personal service and experience. Owning the stores itself allows Dutch Bros to have greater control over their brand. If they're setting out to open franchises, then they lose control of some of that brand appeal that they have. Now, the playbook for Dutch Bros. This was a really good leadoff earnings report. I had some concerns given the big moves the stock has made, but Dutch Bros might not live up to lofty investor expectations. We'll have to see. We are generally fans of early stage growth stories like Dutch Bros, especially when they have unique concepts and popular with consumers. I also like when a company makes bold predictions about store growth. And Dutch Bros, they've done that. I think the stock may be due for a near-term pullback, so I'm a little cautious chasing it where it's currently at, but I like the concept quite a bit and think it's worth a look on pullback and weakness. Also, keep your eye out for Black Rifle Coffee Company. It's merging with SPAC Silver Box Engagement Merger Corp. And that ticker symbol is SBE, EA. SBEA. Now, they had this massive run up when the news was announced. If we look here, they ran from, what is this? They opened at $9.80 and ran up to $15.75 before falling right back down to earth. But the reason I say watch these guys as well is because they have a compelling story as well, just like Dutch Bros. They also have a very big social media presence and a very loyal fan base. So the big run that we had in Dutch Bros, once this merger is complete with Black Rifle Coffee Company, I think we may see a very similar story play out. Now, they are quite different in how they're going about selling coffee, but nonetheless, it's that unique story that they have to tell. So that's my thoughts on Dutch Bro. And then also a little side note, keeping an eye on Black Rifle Coffee Company merging with or doing a reverse merger with Silverbox Engage Merger Corporation, ticker symbol SBEA. Yeah, that candlestick, that is huge FOMO, no doubt. Absolutely. All right, another company I want to look at. We've talked quite a bit about Zillow when Zillow was having its problems with home flipping, but Opendoor, ticker symbol open, they have been doing home flipping for a much longer amount of time than Zillow did. And guess what? Opendoor was able to do a much better job than Zillow at flipping homes. If you look at this, there was this nice run up from their last earnings, okay, back in August. Very nice rally. And then the news about Zillow came out, and that sent a lot of shockwaves hitting Opendoor, knocking it down. I mean, look at this big red candle here. It fell all the way down to its 200-day moving average and actually dipped. People were so scared of Opendoor because of Zillow's news about stopping the iBuying process that it sold below its 200-day moving average the day before earnings or the day of earnings being announced, right? But then once earnings came out, boy, oh boy, did Opendoor impress. The stock went up, and then they were up another 15.5% here today. They're flattened after hours. They got to a low of $19.07, and now they're up to $22.51. Now, Opendoor, I think, is looking rather inviting. Yes, it's run up a little bit, but if there is a pullback relatively soon, I think it would be a good buy the dip opportunity. This right here, right before they announced their earnings, this was the buy the dip opportunity that I think we should have gone after this one more aggressively, because this was a good buy the dip. And then just hear me out on Opendoor. All right. So they blew the roof off Q3 earnings with its exceptional revenue growth. It was awesome for the quarter. Its revenue growth was 569% year over year growth and 91% sequential growth to $2.27 billion in Q3. It easily smashed estimates and came in well ahead of Opendoor's prior guidance of $1.8 to $1.9 billion, or 56% sequential growth. It has also been quite a surprise after its now former competitor Zillow recently announced that it is planning to exit the same business that led to the fantastic quarter for Opendoor. So it just goes to show how management, how a founder of a company, how the management of a company can really change what a company can do. Opendoor, they were able to nail it. Zillow, they messed up. Now, once the issue that Zillow had faced, they couldn't flip homes, right? And that provided the uncertainty surrounding forward home prices. They just couldn't predict it. The company could not correctly forecast anything for home appreciations. They just couldn't do it, which increased slower than Zillow predicted the prices. Now, in Q3, that led to large inventory write-down on its purchased homes. That's for Zillow. Now, against this gloomy backdrop of Zillow just crashing and burning, I am impressed with Opendoor's contribution margin of 7.5% in the quarter. Zillow crashed and burned. Opendoor, doing the exact same business, flipping homes, had a margin of 7.5% in the quarter, despite incurring similar headwinds as Zillow did. Furthermore, Opendoor expects to operate within its 4 to 6% target range in Q4 and move towards a 7 to 9% range over the long term. So Opendoor thinks that they can do their business better than they are doing it right now. Now, Opendoor's solid results were also helped by expanding the type of homes it purchased, leading to a surge in customers selling their homes to Opendoor over the past 2 quarters. In Q3, Opendoor purchased 15,000 homes. That's up 79% sequentially, despite buying 136 more homes quarter over quarter in Q2. This does lead to a significant risk in reselling at around its target 4 to 6% margin, though, especially if the housing market cools down. And we're kind of seeing signs already of the housing market starting to contract a little, especially in certain areas around the country. However, I don't expect this to happen over the near term, like overnight. I think it'll take several months to occur. For example, one of the largest home builders in the US, Lennar Homes, ticker symbol LEN, noted in late September that it expects short supply to remain for a while as home construction is unable to ramp up quickly enough to meet the current demand. Opendoor expects Q4 revenue of $3.1 to $3.2 billion, representing over a 1,000% growth year over year and 37% sequentially on low end of its guidance, despite Q4 typically being a slower quarter as home buyers start to die down for the season. Now, the main takeaway here, after Zillow's surprising announcement to exit what Opendoor's primary business based on was too risky, too uncertain, and a lackluster quarter for Zillow, Opendoor delivered many different Q3 results that provide a huge sigh of relief for investors. With Zillow out of the picture, Opendoor has one less competitor and, backed by its Q3 results, looks well positioned to continue its trajectory of meaningful growth heading into 2022. In addition, Q3 tends to be the best quarter for buying homes and selling them, as it contains peak home buying months. So, when Zillow was unable to meet expectations with its Zillow Offers segment, where the company buys and sells houses like Opendoor, despite operating during the peak home buying season, investors were shaken, and Opendoor saw its stock sell off like Zillow on the news. As such, after Opendoor delivered a meaningful earnings beat in Q3 and provided upbeat Q4 guidance, the stock is unsurprisingly soaring. So what do you think about Opendoor? Do you think the company can succeed where Zillow has failed? I think it can. So again, any weakness or any pullbacks in the stock, I think are signs to get on board, especially if you can get it for under $20. I really think that is a good buying point. And if we look at the history right here, it had the same history as most other high growth stocks. It ran up big in January of this year and then sold off all the way into May and June, and then started to rally towards the end of summer, right? Okay. So Opendoor right now is hanging around its 21-day moving average. I think it could fall back to its 50-day moving average and maybe consolidate between the two for a little while as investors, because I think a lot of the bigger investors, they feel burned by Zillow. And just look at Kathy Wood buying a bunch of Zillow shares on the way down while the stock was falling just to sell them the next day for an even lower price. So I think some big investors, they feel burned by what happened with these companies flipping homes, but Opendoor has proven it can be done successfully. All right. That's what I think about Opendoor. Another company that I wanted to talk about, I know we've been going for a while, but I wanted to talk about Affirm. They had their earnings come out too. Ticker symbol for Affirm is AFRM. Now, Affirm has been on a roll, right? Ever since the Amazon news, it has really taken off. But right here during earnings, it fell down to its 50-day moving average. This was a very good buying opportunity, especially with how far this stock has run over the past couple of months. Now, Affirm has investors, I believe, in the buy the now mood. The company, which is the provider of the buy now, pay later or BNPL services, is trading sharply higher on an earnings beat and perhaps even more on an expansion of its partnership with Amazon. The metrics also show that Affirm's buy now, pay later service is catching on with consumers and merchants alike. Gross merchant volume, GMV, jumped 84% year over year to $2.7 billion, well above the $2.4 to $2.5 billion prior guidance that they gave out. And that would have been up 38% year over year, excluding Affirm's largest merchant, Peloton, which isn't doing quite well. And I don't think it will. I think Peloton has seen its peak for a while. But back to Affirm. Active consumers grew 124% year over year and 22% sequentially to 8.7 million. Probably even more exciting than the headline numbers and metrics was Affirm announcing its expanded partnership or relationship with Amazon. Affirm will be generally available on all eligible purchases of $50. Affirm will also be integrated into, and I'm thinking, I don't know why I wanted to say Apple Pay, Amazon Pay. It will be integrated into Amazon Pay's digital wallet in the US. Amazon also receives multiple tranches of warrants to purchase Affirm shares. Affirm has been raking up some impressive partnerships lately with big name retailers, service providers, including American Airlines, Shopify, Walmart, to name a few. Of course, Amazon is the crown jewel. Affirm announced a deal with Amazon back in August, so it's great to see them expand that relationship so quickly. And warrants likely mean Amazon will become an equity owner, which only cements the relationship further and provides, or perhaps could lead to, a full acquisition down the line. Can you imagine what would happen to Affirm stock if Amazon says we're buying Affirm? That would be incredible for investors. When I started digging into Affirm back at the beginning of their IPO in January of this year, I was a bit skeptical of the buy now, pay later model. We already have credit cards to do the exact same thing. So, how is the buy now, pay later different? Well, we have become so convinced over time. The main difference is that credit card companies make money by charging big interest rates, right? They can get you trapped. And the longer the consumer is in debt, the more money they make. It's sort of a adverse. Oh, the word I just missed the word. Anyways, it's not a healthy relationship. Or consumers of credit cards, I think they get a nauseous feeling in their stomach when they go and open their credit card bill, you know, especially with the way inflation is and how prices are going up. But on the other hand, when you're thinking about what Affirm offers consumers, it's an option of paying several equal installments with no interest and with no annual fees. It's sort of like layaway for the modern times and the digital age that scales across many retailers. It's great for consumers who maybe want to buy a more expensive item and not get hit with a huge interest charge that a normal credit card would provide. It's great for merchants as it draws in new customers who might not have purchased that whatever it was anyway. A firm earns a commission from businesses, and shoppers pay interest on some items. Unlike credit card companies, though, it does not depend on shoppers paying late or staying in debt, which to me is very healthy. Affirm is not entirely a clean story. Profitability is a long way away. The stock trades at lofty valuation. Price to sales is about 21x. And there is some credit risk, but not a lot. Also, buy now, pay later is catching on as a theme, and others are getting into the space, including many startups, plus big names like Square and PayPal. The good thing about Affirm is that it's the big name in the space. And partnering with Amazon and Shopify helps solidify that position. Bottom line, this was another solid growth quarter for Affirm. And bolstering its relationship with Amazon was a huge win. I would be a little cautious that the stock has been a bit volatile since its IPO debut. It's run up really quick, and it's more than doubled, right, in about 3 months' time. So I would just use caution. Don't chase it from here. Let it come down to you. I do like that buy now, pay later is filling a niche that puts it more on the side of consumers relative to the typical credit card model. What do you think about Affirm? Do you like their business model? Or do you prefer the old credit card, Visa, MasterCard? Let me know in the comments, right? Okay, let's see. 5 minutes ago, I just bought a comp that way, looking especially for that kind of deal. Greetings, 4K, greetings for UK. Oh, sweet, awesome deal, man. everywhere at online checkouts. Yeah, it is. It is getting picked up by a lot. Wow, there is a whole bunch of comments today, guys. I greatly appreciate this. I love seeing y'all's feedback and what you guys are thinking. Affirm is everywhere online checkouts. Yep. 5 minutes ago, I just bought a comp that way. Cool. Yeah, I just read that one. Okay, cool. Yeah, greetings. That's pretty cool. You're watching from across the pond. I'm on the East Coast in Northern Virginia, part there, just outside, probably about an hour south of DC. That's where I'm located. You are welcome for the content. I know we've been going for an hour and a half now. I do have one more that I want to talk about, and it links to Disney, because remember, tomorrow on Friday, Disney has its Disney Plus Day. They are releasing a lot of content on Disney Plus tomorrow, and it's going to be a big day. And I think it will be a big enough day that the pain felt in Disney's stock today, it was down 7%. It got down to, let's see, what was the low here? It got down to $158 today. I did buy the dip on Disney. I do hold Disney. I think it has a lot of room to grow. I mean, just taking a third of what Netflix is valued at and adding that to what Disney was valued at the end of 2019 before everything got wrecked, I think they've got a lot of room because they're not running at full capacity. But I'm not here to talk about Disney. I'm here to talk about IMAX next. Ticker symbol is their name, IMAX. IMAX. You go to the theater and you're watching an IMAX, right? Well, with last year, it was a mess. Let me open this chart up here a little bit. If we look at this, they have been in a decline since 2015. They peaked over here in June of 2015. Since then, IMAX has been in a downtrend that is until we reached April of 2020, where it turned it around. Now, here's why IMAX is on. Oh, hold on. I didn't realize it wasn't plugged in. Oh, I hope I don't lose power. All right, so let me run through this IMAX and why IMAX is on my radar. The company is pivoting. And when you see companies pivot after this long downtrend for many years, it's really good. It's really good to see a company pivot, right? So IMAX, they delivered its best quarter of the whole entire pandemic. They are still exploring at-home options, and this is their big pivot. In their earnings call this month, the IMAX CEO announced IMAX Enhanced, a product for at-home IMAX quality streaming. This week, Disney Plus announced it would be the first company to offer parts of the production on their streaming services. Starting tomorrow, during Disney Plus Day, Disney Plus subscribers will be able to stream 13 Marvel movies in IMAX expanded aspect ratio, offering 26% more screen picture and visuals as the filmmaker intended it to be, just like if you're going to the movie theater. In the future, IMAX Enhanced will provide additional audio and visual enhancements that will require a high-priced TV to work properly, no doubt, right? But they are pivoting to at home, and that is why it's on my radar. The company, big downtrend for years now. but it's pivoting and it's going for the right direction. It's no surprise movie theaters have been struggling throughout the pandemic, but even before 2020, like I talked about, ticket sales were declining. The theaters have tried to combat this by rising ticket prices, providing better quality viewing experiences, like offering you full meals, getting a steak while watching a movie, reclining seats. Still, as streaming services continue to release blockbuster hit direct to the platform, or direct to consumer as Disney would call it, movie theaters may be a thing of the past. I don't know. They might be. But the launch of IMAX Enhanced furthers this trend for at-home entertainment. IMAX is the first major theater chain to make a move towards home theaters, partnering with Disney Plus, one of the most extensive streaming services for this particular launch, is taking a big bet on the future of media consumption and distribution. IMAX may have found a way to adapt its brand to the current media climate. Finding ways to adapt your brand to change the industry you're in is I got tongue-tied, is significant for any company's long-term growth. For a bad example, think Blockbuster. They didn't pivot, not in time. Have you had any companies in your portfolio adapt their business to the changing ways of past or post-pandemic? Do you think that IMAX is making a good decision by pivoting this way to score or go after the at-home audience? I do, and that's why it's on my radar. This turnaround could lead to good growth for the company in the future. All right, let me know what you think, as always. All right, just checking the comments here. Any ticker symbols? Because this wraps up what I wanted to talk about today. I am so glad that you guys posted all of these comments and we had this great discussion. We talked about a lot of different companies, different ideas. I love it. I absolutely love it. If I could borrow your ear and your eyes for just a moment, doing this research, I love doing it, but it is time consuming, right? To dig into all these earnings. So I would greatly appreciate if you have a spare couple of bucks to join us on Patreon. It's the first link in the description. I would greatly appreciate that. It would mean the world to me. And remember, I am looking to launch some type of a signal for buy-sell alerts for Patreon members. So if you haven't already checked it out, please do so. I would greatly appreciate that. Okay. Thank you guys for listening. I totally enjoyed today. It was awesome. I can't wait for tomorrow and what we're going to talk about then. But I'll do some research and some digging on some good companies to report back to you tomorrow on. And of course, any big news or anything like that to talk about tomorrow as well. And remember, if you are watching the replay of this, you can leave your ticker symbol in question in the comments, and we will talk about it during tomorrow's live stream. So we've got Disney tomorrow with their Disney Plus day, so I'm sure we'll be talking a little bit about that too. Okay, guys, thank you so very much. I greatly appreciate your time spending it with me. Everyone have a good, safe evening. And as always, thank you so very much for watching, and I will see you in the next video.